Hi, you are listening to the Love and Money podcast, and today I'm going to talk to you about the stock market and why the stock market is falling. So, today is the third day that the stock market has been falling, and this is for several reasons, mainly because what is going on in the world, all the bad news we are seeing, there are several different factors. There is the Delta variant, that's one factor. The news in Afghanistan, that's another factor. The news in China with the market slowing down, that is another factor. So all of these things they create fear of slowing growth. And what happens is the market it goes up and down based on how many people are putting their money into it. So basically when people are watching the news and they see what's going on in the world, they put less of their money in the stock market and the price goes down. Hence, the stock market has been down for the past 3 days. The stock market has been falling. This is the worst 3 day drop since July, in fact. And so, what you want to do is continue investing and keep dollar cost averaging. And you know, dollar cost averaging is routinely putting in money with each paycheck if you're still working a job or with your own income if you are self employed, dollar cost averaging, putting money in on a regular basis, whether the market is up or whether the market is down. Because, like I said before, that's how the stock market works. It goes down and up, down and up, down and up, down and up. It goes in cycles. However, if you are near retirement, you want to make sure that you are diversified. Even if you aren't near retirement, you want to make sure you are diversified because in the event that the stock market goes down, right at the point where you decide to retire, then that is the money that you're living off of, and you don't want to be solely dependent on one source. So, say for example, you had saved $800,000 over the whole period of your whole life, and then the stock market goes down because of what's going on in the news, and say that it's halved now, say it's 400,000 and you're ready to leave your job. So the market will eventually go back up, but how long will it take to get back up? That's the question. If you're ready to retire, then you want that money that you saved your whole life, you want that now. So you don't want to wait for that to go back up. Even knowing that it will go back up eventually, most commonly it takes 2 years to go back up. But in history, some have taken longer than that. Some have taken 15 years to go back up, um, maybe even longer, things like that. So, because you know that the stock market goes in cycles, it goes down and up, down and up, down and up, based on what's going on in the world, based on the news, based on what's seen in the media. What you want to do is make sure that you are diversified. And by diversification, I mean getting in the habit of saving up cash. So, in the event that the market is down, if you're ready to retire, you have that cash to live off on until it comes back up again. Better yet, you want to get into real estate where you are getting into the habit of buying property, um, one house a year, for example, or however you wanted to do it, so that if the market were to go down, you would still have that rental income. So, so you're not reliant on the stock market. You have other things going on for you. You have the cash because you started a new habit of saving cash. You have this cash. You have this real estate because you started a new habit of buying property. You have this cryptocurrency because you have a new habit of weekly investing into cryptocurrency, no matter how small it is, even if it's 1%. Because remember, I told you I'm doing 1%. You have that new habit of cryptocurrency. You have your own business, even if you're working a job, a regular job, you have your own business. So you have that new habit of income coming from your business. So by diversification, I mean you are not relying on one thing only. You are not relying on the stock market. You have other things going on. You have the stock market, you have your cash, you have your real estate, you have your cryptocurrency, you have your businesses, and anything else that you can think of. Some people buy things like art, collectibles, things like that. So when things are going on in the world, like this whole Afghanistan issue, this China issue, this COVID issue, you're not affected by what the stock market is doing. If it's up today, if it's down tomorrow, because you have other things going on. So you want to start working on your other things instead of just relying on one thing. We all know, as a result of the pandemic, when people were losing their jobs left and right, that's when a lot of people woke up and they realized that relying on just one job is not going to cut it. So that is basically the reason why the stock market is falling. It's because people are not putting their money in there because of the fear of everything that they see that's going on in the media, the COVID, the slowing down of the stock market in China, the Afghanistan, the Delta variant. So that's what's going on as far as with the stock market. Goldman Sachs recently looked at the GDP and they decided that they would cut the GDP's forecast for the United States. And so I'm just going to briefly describe what the GDP is. So the GDP it stands for gross domestic product. And what they do is they evaluate how healthy the country is from an economic standpoint. So you like for example, when you go to the doctor is going to order labs for you to see how healthy you are physically. They're going to see if your cholesterol is good. They're going to check your blood pressure. They're going to check your your BUN, your um, any other labs, and they're going to see if you're healthy or not. Do you have high blood pressure? Do you have diabetes? Or are you disease free? And so with the GDP, what they're doing is they're checking the health of the economy. Is the economy healthy? And they do this usually, sometimes they do it annually, but they also do it quarterly. And what they do is they take reports from the different retailers looking at the gross domestic product. They're looking at the market value of the products and services. And they're looking to see if the value is where it should be or if it's being affected by things like inflation, things that shouldn't be there. So, gross domestic product, GDP, is looking at the overall health of the economy. So, like I said before, Goldman Sachs, they decided to cut the GDP forecast for the United States. So there's some concern that as far as the stock market goes, that we might be going into a bubble. And Kathy Wood from ARK Investments, she is basically the expert as far as it goes with investments. And she's stating that there should be no fear as far as it pertains to a bubble coming. And so, what a bubble is essentially is when people start to sell off and they're selling off left and right, selling off left and right. And so, like I said before, with the stock market, it depends on how many people are in it. If there are a lot of people buying into it, the prices are going to rise. But when people start selling, that's when the prices they start decreasing. So in an economic bubble, everybody is in a panic and they start selling, then the prices plummet and then the stock market plummets. And so that's what a bubble is. That's what some people are concerned about and have fears about. And Kathy Wood from ARK Investments is saying that there is no bubble coming in the near future. And so this is what's going on with the stock market. Like I said before, this is the worst 3-day drop since July. And so this is what's going on with the stock market. Like I said before, you just want to work on your different avenues of diversification. And that's the way that you're going to protect yourself by not depending on just one source. And we know ultimately that God is the source. God is the source. And no matter what's going on, we're going to rise to the top in spite of everything that's going on around, in spite of any enemies that you see. You know that if you have enemies, that those enemies are your footstool and that you're going to rise, that God will prepare a table for you in the presence of your enemies. So when you see all of this adversity and when you see these enemies, be happy and know that they're your footstool and God is preparing a table for you in the presence of your enemies. And you have no other choice but to rise, to elevation. So this is the Love and Money Podcast with Shakira. If you like this podcast, please share it with one other person. Please hit the share button on the bottom and hit the like and subscribe button. It helps the algorithm. Thank you for listening.